for the year. Sonia, tell us more.
It's a fresh record high that CG Power hit yesterday, and as you rightly pointed out, in this week alone, it's up about 11%. The volumes yesterday were up at about 50 lakh shares, which is about 36% higher than the 10-day average volume. So the buying is coming amidst large volumes. Now, CG Power, as we know, has three businesses: industrial, power and railways. I'm looking closely at the industrial business. It has over 35% market share there. And the big trigger for the industrial business is the plans that CG Power has in the electric mobility space. Now, they do manufacture motors, generators, alternators, etc., drives, stampings, but they're looking at EV as a big opportunity, EV motors, over the next 4 to 5 years, as per their annual report. Now, they've set up a separate EV mobility business to re-enter three-wheelers and EV tractor motors. And as we know, this is a space where there are a lot of big investments being made from OEMs. Now, they've announced a motor segment capex at 400 crores over the next 12 to 24 months. And the breakup of this includes a 230 crore capex that they will be undertaking for a motor factory in Goa. Now, this expansion would increase their capacity of low-tension motors up to about 20 lakh units from 9 lakh units currently. So, there's a big capex plan that they have. And remember, EV motors are still at a developmental stage for CG Power, but their earnings have been reflecting a very strong up move. So, in H1 itself, EBITDA margins have improved about 200 basis points. And we have the Q3 earnings coming up on the 24th of Jan. And there's buying that you're seeing ahead of the numbers. In fact, I want to toss this question to Gurmeet Chadda as well. Gurmeet, I know you track this space very closely. CG Power now at 300. Is the risk reward still favorable, and how are you looking at this electric vehicle opportunity that the company is focusing on?
So Sonia, as you said, I think some of it is in the price, the way, the prices move up. And these days markets, tend to discount any positive trigger and negative trigger, the way it punishes very quickly. What we like more now at this point of time, while CG Power is Tata Power, it has consolidated after a good up move post-COVID. If you see, it's a more integrated business with generation, transmission, distribution. They reported a very good number. They almost did 14,000 crores of top line in Q2. The coal and Mundra business did well. They were able to recover losses in some other ones, and even the discoms did well. And they have a clear renewable goal spelled out in terms of what they want to do till 2025. Expanding share in EV in terms of the EV charging ecosystem. They have a 40% plus market share. Solar EPC order book being very robust, almost 11% market share in solar panels as well. So that's something we like more, at this point of time, considering the valuation.
Okay.
All right.
Just want to mention that Gurmeet is talking about, Gurmeet, you were talking about Tata Power, right? Not
Yes.
CG Power.
Yes, Tata Power.
Okay, all right. Just wanted to clarify that.
A powerful bunch. But thanks very much, Gurmeet. Great to have you with us here as always, and good speaking with you. See you back soon. Well, let's talk about the pharma space now. Yesterday we saw some action. Stocks like